Good morning, everyone, and welcome to another edition of Blading Crypto's Market Update. Today is Tuesday, September 17th, 7:51 a.m. local time. I hope you're having a great day, morning, or afternoon, depending on where you are in the world. Let me start off with giving my disclaimer. I am not a financial advisor, and this is not financial advice. This is to be used for entertainment purposes only for your fantasy paper trading. All right, guys, so taking a look at Bitcoin here, starting off where we left off yesterday. Yesterday, we were looking at the possibility of coming down to the consolidation rule because we invalidated the continuation rule. The continuation rule dictates that when you come down to it, and let me show it to you real quick, you come down to it that you bounce off of here, but if you close below it, the way we did here, then you invalidate that and you go to the consolidation rule. The consolidation rule then dictates that you're going to stay there a little bit longer before possibly moving up. These are 4-hour candles. 1, 2, 3, 4, 16 hours of consolidation. And look at what we have. We also had some targets to the upside. We had the DCT local heat here, and we had all those small contracts. If you recall, it was like 8 or 9 of them. And the last one was $100 million right in this area here, and we came and took that out. So since we took that out, what I'm going to do here, I'm going to remove that to clean up our chart. Right there. All right. And we also wanted to get above this purple resistance line, which we did here on the 4-hour time frame. You can see where we continue to move up higher, and now we're back into the lower high on the macro view. On the daily time frame, we've established that we've put in a lower high, a potential lower high. And the reason I say potential is because a full lower high will dictate that you have a lower high and a lower low. We haven't put that lower low. This is a potential for a lower low to come in, but we don't quite know that just yet. As of right now, what we are doing is that we did complete the harmonic pattern. And we did come down to the 618. Yesterday I touched on that. So if you haven't seen yesterday's video, please do so. On the completion of a harmonic pattern, typically we go to 618. And that's exactly what we did. Sometimes it goes a little bit lower. So, don't hold me to the exact fib count, but we got within that normal play that we get with Bitcoin. So for right now, it does look positive. And here's some of the positives. We consolidated on the consolidation rule. We broke above major resistance. We also broke above this major resistance right in here. This neckline of this M-top was super important for us to confirm if this move here was just a back test of the bear break, or are we going to reclaim this and start heading up higher. So what I'm going to do here is I'm going to remove this. These are valid lines. I don't like to crowd the chart too much. You can see here the support and resistance, but I think this one, if I had to choose from these three, this to me has more validity. This is the macro strong line that we have to hold. So I'm going to remove this for now. Like I said, I just don't want to crowd my chart. So what I'm looking for now is this. We blew through here. Okay, and on the 5-minute time frame, though, we did back test. Look at the way we came down and we back test that just beautifully. Now, one simple back test like this doesn't really constitute a confirmation, especially with the magnitude of the move that we had, but it's nice to see. It is nice to see that the back testing rule that I talk about every day, that I preach every day, does happen. Sometimes you just have to go down to the lower time frame to witness that. But like I said, this alone doesn't confirm it. So what would I like to see? I would like to see more of this. I would like to see more consolidation of this. If we continue to go, to me, it starts forming a blow-off top type scenario before a bigger move to the downside. And that's what I don't want to see. I don't like fast, violent moves, because those are not created by normal trading. Those are usually liquidation events. As a matter of fact, we had this here, this DCT map. Look at this. We had heat up to 60,375. Look at what we did. 60,000 right here, 406. We took out all the heat that was displayed, that was created on a 3-day look back. on the DCT map. Do you see why these tools are so useful and they're so accurate? Look at that. Within within $75, we came in and we passed it by $75. So it just goes to show again the strength of those tools. But now we have to see if all this was because of the violent move, or was this just a liquidation event? And what did that liquidation event create on the move up? We have data here that says a lot of contracts came up and they are lining up to the slaughter. So that lining up to the slaughter will hopefully give me more data for me to say, okay, let me go back to the 4 hour. All right, so is this, now that we broke this neckline, are we reclaiming this as support again? And if we are, then I'm looking for higher prices. If we come back down and we reject here, then this tells me that this was just a liquidation event and nothing else. But this could, even though this was a liquidation event technically, because you saw that we took out all of that liquidity, do we have enough strength to continue? That is what I don't know. I don't know if this is going to be something where we're going to confirm, or are we going to invalidate and continue to go lower? Because ultimately, remember what I say, I'm going to remind you guys this every single day. My target of $51,500 has a 90% probability. And the only thing that could invalidate that is going to be a clean break above here and consolidation above here, which is something that's never happened on this channel line. This channel line started 6 months ago and it's never happened. So that is the only thing that is going to invalidate that move to $51,500. And we're look at where we're at, guys. We are hitting that purple line once again. So we respected the continuation rule, but we also had a liquidation event that ended again. Once again, let me increase this. I don't know if you guys have any trouble seeing it, but sometimes I have a little trouble seeing that. I was going to make it bigger. Give me 1 second. How do I increase that? I think I can increase it maybe here. No, that just takes care. No, this one right here. I believe. No, actually, I don't know. I don't know how to increase that. I was hoping to increase this purple line. This purple line. No, I can't. Oh, well. Hopefully you guys can see it clearly on my chart here. So we're up against that again. Now, what does that also do for the market structure? Check this out. Look at this. What do you see there, guys? Let me show you. Let me point it out. In case you don't see it, let me point it out. A potential double top. Look at, let me get rid of this here. Done. Look at this. Very often you have to change the time frame to notice certain market structure. So on this particular one here, I can see it very clearly. Here you can't see it as clearly as until you do this. Look at the M top. You see this M top? Look at the result. So it just depends on, here it is again. Look, and here this one, you can probably see it clearly, a little bit more clearly if we change. Look, there it is again. There it is again. You see that? These patterns, so basically where we're at right here is the equivalent to here. Like if I were to move this all over here, look, you see it right there. You see that? You see this market structure? Check this out. There it is right there. So the question is, do we invalidate this? Do we put in a higher high or do we double top? And do not forget that I showed you guys this on believe it was yesterday's video. every single time when we've hit the top of this channel, we've put in what I call a signature move. That is a sweep of the highs. Every single one of those moves. Again, if you haven't seen yesterday's video, please do so. So be very careful that you don't fall into that trap, because that's exactly what these are. These are traps. These little swing highs, the swing failures above the previous swing high. Those are what I call signature moves, and every single one of them has led to a downfall. We're double topping exactly here. Could we put a signature move? And if we do, is that going to give us another move to the downside? That I don't know, and that we can't know until we validate or invalidate that move. So let me go ahead and put my drawings back here. Actually, I'm going to just hide the indicators, and I want to just come up in here, and I want to show you exactly what we're doing. Look, we're pushing right up against that. So a signature move would be this, is what I'd be looking for. I come here. Now you can see here we have equal highs here. So very often we come out and we take those equal highs just a little bit, not much, and then we roll over. But could we maybe put another set of equal highs as a target to come back later on? Yeah, we could. And I'd be looking at this wick right here. If we could come up to this wick and then roll over, which is prior strong resistance, that would create another set of equal highs the way we did here. And look, we just took out that equal high. There it is right there. We just took that out, and this could now be a possible signature move. And a signature move is represented by a wick. So if we were to close the candle above here, that is no longer a signature move. And that could now constitute a continuation from this consolidation on the lower time frames for a higher high. Now, obviously, if we close a candle here, that technically is a higher high, but that's not the higher high that we're looking for. That is the beginning, in my opinion, the beginning of a larger move to the upside. But we're going to have points like this here that we're going to be cautious with. Do we reject here, create another pair of equal highs, and then roll over? That, again, guys, is something that we're going to have to wait and see. But this move that continues to push the way it has on the hourly time frame, even though we did have one small 5-minute back test, is not really the confirmation that I like to see to say that we flipped this back into support. This is just a continuation of this bullish move that, again, I don't like those big violent moves because they don't create a lot of base on this particular move. So they tend to come back down much quicker. For today, what I'm looking for is, do we confirm here? And now here's a tricky part as well. We have FOMOC tomorrow. It is a guarantee that it's going to cause volatility, meaning that it can go up or it can go down, but it's going to make a violent move tomorrow. So at this point, is it smart to be taking on additional risk? Should you be taking on additional risk? Sometimes the hardest thing to do is just sit on your hands, let that announcement come in, and then take a position. We all know that that's going to create, depending on how you're viewing the market, and we don't know how the market is going to absorb it. Some people say the 50 basis point is going to cause the market to crash. Other people think it's going to be bullish. Other people think there's going to have a blow off top. No one really knows. Everyone just has their own opinion, which is fine. They can have their own opinion, but the only thing that really matters is how the market reacts to that news. And even though we'll have extreme volatility, usually even during extreme volatility, once that initial wick happens from the algos, we start seeing that discipline back into the market. We start seeing those support and resistances start to have validity once again. Because those big whipsaws, those are not TA. You can't TA those. You can't. But what you can TA is, for instance, you got a big whipsaw, and then what does it do? It settles down. On that settling down, then we take that news, and then we discern, we dissect. Okay, where did we end up after that big wick? Did we end up below resistance? Did we end up on top of support? Are the indicators the oscillators, are they reset? Are they curling up? Is the momentum coming in? Is the CMF, is the OBV starting to point up? Because those are the money flow. So if that money flow is starting to come in and the indicators haven't quite, the momentum indicators haven't quite picked that up yet, that could be a little precursor that things are going to start shifting back to the upside. So there's a lot of little things that we could be looking at that may give us a little heads up on a continuation to the upside. But for right now, as you can see, we're still pushing up here with a bull break of a major resistance line with no real confirmation. We had one 5-minute touch, beautiful, no real confirmation. So a lot of this could be the market makers wanting to trap the longs. Look at this delta. Check this delta out, guys. $8 billion wiped out yesterday. Wiped out on this move. This move here, it wiped out $8 billion. Well, at one point this was $8 billion. At one point, $8 billion, then went down to $6 billion, and we wiped it out. Now look where we're at again. We're right back to $4.4 billion. So could they be setting up for another slaughter? That's what they do. That's what they do. And what a perfect way to set this up before tomorrow's big announcement. You have to understand, guys, this market is designed for the market makers to maximize their profit. Look at what we just did. We just hit the bottom. We just hit the bottom of the horizontal channel. So watch this. I don't have the horizontal channel here. I only have the diagonal. So I'm going to go ahead and put this. I'm going to put the horizontal channel on here. So give me 1 second, and I'm going to do that here for you guys. I don't need that. Here is the horizontal channel. So we got right there and right there. Look at what we just did. Look at this. We are now pushing up against that horizontal bottom of the horizontal channel, which again, if we go to the left, you're going to see how much resistance. So for right now, what I'm going to do, I'm going to bring in the real estate in here, and then I'm going to get rid of the diagonal just for a moment, and I want to show you guys something. I want to show you the amount of support and resistance on the bottom of this channel. Look at this resistance. Look at this play here until we found a path here. Look at this, all of this support and resistance here. Look at this perfect candle body support and resistance. Look at this perfect candle body support right here. Look at all the support right here. Look at this support here. Look at this support here. So from the underside, you can understand why you have so much volatility. We have to start validating these higher highs by looking at things like this, reclaiming them, continuing to move up, and knocking out each prior resistance and flipping it into support. It's not easy because we had 5-6 months of structure putting in here that gave us a lot of points, a lot of really good points of a support and resistance that we now have to negate on the way up or flip to our side, depending on how you want to see it. This was the box that we talked about over the weekend. I was hoping that we'd see this over the weekend for a scam pump weekend, but we didn't get it. But this here, in my opinion, coming up to this area here would create massive FOMO. That's why I was looking for this area here. To me, this would create some massive FOMO, get everyone long. That's what I was hoping that we'd see this weekend. We see this coming up here to get massively long before they drop the hammer to 51,500. And if you think the market can't take that, the market can't take that. That's what the market usually does. Look at this. Look at this move here. Look at this move here. If you think the market won't, oh no, the market can't do that. It's not going to mess up the momentum. Yes, that's what it's designed to do. Look at this drop. Here, let's do this. Let's take a look at these drops. Just to give you an idea of what the market, how the market traps people and the violent moves that precede that. Look at that. Look at these. Look at these moves. Look at these moves down. Look at these moves. 22, 25, 30%. So you're telling me that the market can't do this? Can't get us up in here and then bring it down to 51.5. This is my marker right here. 51.5, 21%. Is that out of the ordinary? I see 30, 25, 22. That would be less than what the market has done in the past three drawdowns. So the problem is it's hard for people to see these drawdowns because first, they don't zoom out. Second, they don't look left. Third, their emotions always get the best of them. And that's why these drops are so violent, because their emotions has them thinking new all-time high, new all-time high, new all-time high, new all-time high. So once again, they're going to think new all-time high, and that's how the market makers do this. That's how they wipe out billions and billions of dollars in contracts every few days. Here, in one day, they accumulated $2.29 billion worth, just one day, in short contracts, and they just knocked them all out and created another 4.2. Let's see here, 5. No, we're at 5. I can't even grab that in there. We're about 6 billion. We're in 6 billion. This 5 point here, it's not. I can't grab. And you know what? Let me do this. Let me open this up for a second, and I'll be able to maybe get a little bit higher on this point here. Yep, we're at 8.66 billion as of right now and building. 8.66 billion liquidations. What a coincidence that they're doing that the day before FOMOC. You think that's a coincidence? Better said, that's no coincidence. That's what the market makers do. Now imagine if we can make it up here, which is a tall order, very, very, I think it's a very difficult, but I wouldn't put it past them. It probably get at the liquidations in the 18 to $20 billion before slamming this down. These liquidations here were 24 billion. The reason I know that because I follow the data every single day. This was $24 billion that they wiped out in liquidation contracts. So I don't trust these market makers, especially when I see moves like this, because I understand what they're doing. I understand the traps that they're setting. Everything that's been inside of this channel has just been a trap. That's all it's been. And no one can say different, because you look back and show me how we broke out to new all-time highs. We didn't. All we did is trap, 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 and it looks like we're setting another trap. I have no reason to believe that they are not. All right, guys. Hopefully this video helps you to keep a reasonable perspective on what to look what to look out for. I just wanted to put my diagonal channel back on there. So just be very, very careful in the positions you take and the positions you're going to hold through the FOMOC. If you want to scalp, yeah, scalp it. Scalp move. We had already scalps this morning in our in my Telegram, in my $25 a month Telegram. So we did pretty good. It was here. Give me 1 second. We had 5.39, 8.16, and 4.53. Great. Nice little ROIs to start the morning off. And if the market wants to give us a little bit more some of those scalp opportunities, we'll take them. We will take them. But rest assured, guys, that you really don't want to be holding any big positions on high leverage during on a news event like the one that's coming out tomorrow. I wouldn't advise it, but it's your money. You do whatever you feel is right for you, but just be careful. If you have a substantial amount of profit, write up your stop loss. You do have a high risk of them hunting it. I'm a big fan of using alerts versus hard stops. But in situations like this, where there's many of the situations where I use a hard stop. The biggest one is going to be when I'm sleeping. The next one is when I have too many positions, a few of them open, and I want to secure those profits, I'll move them up. So if I get a wick down, or if the market, better says, rolls over really quickly, it's very difficult to exit 4 or 5 positions when you just have alerts. You're gonna lose out all if not go into the negative with your positions, and that's not why put all that work in for that. So some of those times, but most of the times, I rather use alerts. And many traders that have been around for a while will tell you you the same thing. Stop hunting is a real thing. If you're too close to your entry and you have a substantial amount of profits, the market makers are real quick. We call those scam wicks. They just come, they take it and they come right back up. The market is designed to do that. So understand how to play their game and not fall for the games. And sometimes you're forced. You have to sleep. You have to, maybe go run some errands, and you don't have the ability to be sitting in front of the monitor. So those stop losses are useful at times, but I am not a big fan of hard stop losses. Just to give you a little bit of background for that reason, because of the stop hunting that we see very often. All right, so look, guys, we're just pushing up before I end here. Okay, we got up above this prior wick, so we no longer have a potential equal highs, and we're now looking into a high. We have technically a higher high. We're still within the macro lower high rule. So I'm going to shift this over just a bit. Right there. Okay, perfect. We just hit 706. Look at that. Absolute perfect touch of 706. God, I love these. I love fibs. It's just incredible to see. So we could hit here, and if we do roll over, we're still within the lower high rule. But the fact that we have FOMOC tomorrow, go to Friday's video. Just go to Friday's video and listen to what I said about this area here. Before FOMOC, I wanted us to be in here. I just thought it was going to happen on the weekend, but look where we're at, and look at the goal. Look at the goal, and we bounce off 618. So definitely can see that happening. It would be possible. This candle already, just this candle is a $3,000 candle. Can we get a candle like this, which was a $6,500 candle? Absolutely, we can. As a matter of fact, let's measure this candle real quick. Let's see this. Look. Let's see this. Let's look at this candle, and let's grab this. And what would that do? What would that be like? that would get us right into our box. Oh my God, I love this stuff. All right, guys. So let's wait and see what happens. Again, don't trust these moves. These moves are generally for a nice trap. Just look left. Big candles like this are followed by what? Look, big candles like this are followed by what? You see? Just look left, guys. Just look left. Look, big candles. Look at this big candle. 4,600, 5,100. Look at that. Look what it precedes. Okay? Look at these massive moves. Did that cause all-time high? Nope. Not even close. Nope. All that was to FOMO you in for the big drop. You see that? Just look left and look at what happens when you have strong candles. They don't result in all-time highs. They result in traps, and you're within the trap zone. This yellow and this yellow bar represent the trap zone, and you are inside of it now, putting in the same candles that have caused a downturn every single time in the past 6 months. You tell me what the probability is. What do you feel the probability is? All right, guys, have a good day.